Welcome, Mr. Denome, and welcome to this crypto update. Today, we're going to take a look at the fundamentals, the news, and the technical analysis to determine where the price will go next. And we will look at the overall health of this bull run. In my previous video, I showed you these two trend lines here, and they would show us that the peak of the price would be around $155,000 for this run, and that would align somewhere at February this year, and then it's most likely going to be bear market after that. And I still stand by that. We will take a look at how the markets obviously continue, and when Trump takes office, the first days, the first weeks really are gonna set the stage what we think of the bull run going forward. But all in all, I do believe that at first, when Trump takes office, it will be bullish, but then the reality sets in, and then it will be bearish. So right now we're still subscribing to that idea, but in the short term, I do believe that this is starting to look like the bottom here. We do have a little bit of mirroring from the past. So let me show you. This here was the support line for the price here, about $60,000 to $70,000. But as you can see, we peaked right below the trend line here for a very brief moment, and then we went continued to go to the upside to basically retouch this trend line here. Now, when I take a look at the Bitcoin chart, basically the same exact thing looks to be happening here. We are in the short-term trend line here, and right now, as you can see, we have a little bit of a gap between the trend line at the moment. So what I expect could easily happen is that we have a very brief move to even to 89k, and from there whales get into positions, and then we shoot upwards. But when I'm looking at the momentum and the amount of buying, it's starting to look unlikely that we will even have this scenario. We might just continue to go to the upside from here, but I will talk about those quite soon. But anyway, right now, this is looking to be the critical moment in Bitcoin price. If, however, this trend line gets broken, then we're looking at a much more deeper dip on the Bitcoin price to like 80k, even to 78k. And the reason I'm saying that these two price levels are important is actually when we go and take a look at the CME futures for Bitcoin. So for CME futures for Bitcoin, when we open those up, you can see that here between 78,000 and practically $80,500, there's a gap in this price here. And why this is significant is most of the time when you see gaps in the CME futures, usually those gaps eventually will get filled. And why does that happen? The reason is massive players, whales, big hedge funds, or whatever large players, they look at these CME futures, and their trading algorithms, their trading bots basically wait until the price is at that gap level once again, and then they start buying, and then they start bidding. That's why these usually act as a strong support. So that's one of the reasons why I do believe that like 78k will be the absolute low for this price move here, and then at least we will have a temporary jump to the upside. But as of now, I don't believe that this trend line will get broken, but if it does, this is basically the lowest that I'm looking for in the Bitcoin price. Now going back to the chart here, there's one more thing that I do want you to notice, and that is this RSI trend line breakout to the downside. So we had this supporting trend line here for a long while, and as you can see, this has now broken to the downside. And this is obviously not what we wanted to see. What I wanted to see is that we stay above the trend line, and we have one more final push to the upside, and that would have been an easy way to get out of the markets. But we did not get that. We went below the trend line here, which kind of signals a short-term or medium-term shift in momentum. And right now, as you can see, we are below the 50 level, which is obviously not the place where we want to be. We want to be above 50 level in the RSI, the momentum indicator. But when we take a look at what has happened previously, this is again mirroring the past. So here you can see we had a similar situation where we had this trend line on the RSI and we kept making higher lows until we broke to the downside here. And then we basically had some consolidation here, and then the price actually continued to go to the upside. So even though we break to the downside here, it doesn't mean that the trend has completely shifted. It simply means that the momentum is practically lost for now. And the same thing kind of works here when we take a look at the longer term trend line, this bottom here, we track it in the RSI trend line here. You can see that once this broke to the downside here, that's when we basically entered to the consolidation area here, which lasted for almost 6 months here. So that's what we don't want to see. So hopefully what we can get is something like this. So that this would be the bottom for the RSI. We bounce back to the upside and we would have this continuation of this bull run at least until February or even March of this year. That's what I'm hoping for. But we have to get out of this short-term trend line here on the downside, and that would basically break us out about in February. And that's again one of the reasons why I think February is going to be important. Obviously, Trump takes office and all these things, but that's basically when I do expect to get out of it. We could have that one final dip to the downside here first, and then one more push to the upside, and that would be the end of this bull run, in my opinion. Now, anyway, that's simply looking at the charts here. It doesn't give us strong indicators what's going to happen next. So for now, let me show you some of the most recent news that we saw about Bitcoin. First off, Michael Saylor, he just posted that disconcerting blue lines on sailortracker.com, and he always posts something like this when he intends to buy more Bitcoin. So it seems like he wants to buy this dip here. We will see that in the next few days, but it seems like Michael Saylor is about to buy more Bitcoin for himself. Next, volatility shares have filed for a Solana ETF with the SEC, with spot ETF, with 2x leverage ETF, and with short Solana ETF as well. Let's see if these get pushed through, but last time they pushed for Ethereum ETFs and those were approved. So apparently this is pretty nice. Next, we have another company called REX. They have issued Bitcoin corporate treasury convertible bond ETFs. So let's see how this goes, but this would be probably bullish for Bitcoin. I did not take a look at the details of this particular news here. You can pause the video and look at for yourself. So fund is 80% non-fundamental share approval. Shareholders will given 60 days advance notice to fund 80% policy. So it will invest 80% of its assets plus any borrowings for in convertible bonds issued by companies that hold Bitcoin in their corporate treasury. So essentially what you can do is you can buy those Michael Saylor's convertible bonds that will later on be converted to the stock. So let's see, let's see if this actually gets approved or not. But this is peak top signal here. Like this is like a synthetic asset of the synthetic asset of the synthetic asset, where the underlying value is Bitcoin. So let's see if this is pushes through or not. But anyway, it's pretty funny. Next, Bitcoin ETFs have actually surpassed gold ETFs in assets under management. So this is crazy. Everybody knows gold. Gold market cap is about 10 times higher than the Bitcoin market cap, but the ETF gold's market cap is less than Bitcoin ETF's market cap at the moment. And this is quite interesting in my opinion. This shows that there's a strong desire to get more Bitcoin for institutions and for investors. But at the same time, this kind of shows me that whatever money is going to the Bitcoin ETFs, I don't know how much more it can be directed to Bitcoin because it's already surpassed the AUM of gold. So at the same time, this is good, but at the same time, it tells me that where do we get more money? Where do we get more liquidity to push prices even higher than this? This is the worrying part of me. So I like it, and at the same time, I don't like it. Next, and this is where we start to get a little bit more bearish. So first off, USDT will be banned in Europe. And USDT obviously is the biggest stablecoin on the market, and some people are quite bearish for this, but you have to understand that even though the ban goes into effect on the 1st of January of 2025, there's still a 6 to 18-month transition period for providers. So at the same time, even though this is quite bad, it's not going to be a shock to the markets. So this the only thing that will happen from this is that EU exchanges will simply transition to use more USDC for their trading pairs, and everybody will just adjust over time to this change. So there's not going to be a shock. So this is good. But then we get to the bearish stuff. So the debt ceiling for United States, it was not raised by the Senate, at least as of now. And this is going to be bad for Donald Trump because when the debt ceiling is not increased, he will not have the capital and money to spend for his deportation stuff. He's not able to stimulate the markets. He's not able to do many things that he has planned to do when he first gets into office, which means that his plan is most likely going to be postponed. And as you can see, Donald Trump is very critical of the Speaker of the House, who actually was a Republican, that he bowed down to Democrats in this issue. And he's saying here that this is going to be the dumbest decision made in years, basically 1929. So we're going back almost 100 years in history that he's saying that this is the worst thing ever. And you can see that Democrats, they would prefer depression as long as it hurt the Republican Party more than themselves. So now we're throwing in the word depression here. So this is the worrying part to me, that if we do not get the liquidity injections, the stock market, the crypto market, every market will absolutely crash. Now, this is the long-term reason why I'm getting bearish, and let's see when I will flip completely bearish even in the short term. Maybe that will happen sooner than I expect. Hopefully not, and we will get the blow of top first. That would be the best. But anyway, this is looming now in the background. The trap has been set for Donald Trump. There will be a major crash coming to the markets, most likely unless he's able to basically swim his way or swim United States out of the global crash that's looming on the background. The Democrats would want to crash the House of Cards on top of Donald Trump, obviously, so that they can get back into power in 2028. So let's see how things go, but this is going here. Then this is one very annoying thing. So bird flu. I'm getting increasing amounts of signals that bird flu is about to hit the markets. And as you can see here, the bird flu is now on every piece of news as we speak. And this is the same exact thing we saw in 2020. Uh, the the COVID crisis pandemic really started to kick off in January of 2020, and then there were these news that kind of just uh, speculated with the idea that maybe this will spread, maybe it will not spread, maybe this will happen, maybe that will happen. But right now, it seems like the bird flu pandemic CDC is sharing updates about it. Then this crazy lady who was all in for the vaccine mandates, all in for masking everybody, all in for everybody staying at home. She's now come out of the closet once again to basically scare everybody up about the bird flu. So if this hits the fan before Trump takes office, then they can implement emergency measures. So this will be very, very annoying. I think California already made some emergency plans as of now, and I don't know. It's crazy. It's something to keep in mind, at least to monitor the situation. So it could not. This could be a nothing burger. But if the Democrats really want to basically set the trap for Trump, and they have the ability to make lab leaks around the world from their biolabs, because they have, I think, in 30 countries right now, uh, this could be a situation. Anyway, keep this in mind. Now, going into the short term though, the short term looks very good. So when we take a look at the order book liquidity delta chart in the 30-minute charts, you can see the absolute buy wall here, $100 million worth of buy orders when the price went to $93,500. So this is a very, very hard to break. This is just showing absolute strength in the limit order sector. So now we're looking at the spot markets. Going into the futures market also, when it finally updates, let me try again. Okay, uh, will it update? Okay, now we got it. So here you can also see 200 million, 230 million, $300 million worth of buy orders. Now, when the price moved to the upside, you can see obviously this, we saw a little bit of red here, but still most of the liquidity is practically below this buy zone. So it will take a lot of sell pressure to actually push the prices even more down than they currently are. So order book liquidity, it looks like this might have been the local bottom. Also, when we take a look at the liquidation heat map, you can see that we do have quite a bit of liquidations here at 92,000 to basically all the way down to that $89,000 price level that I shared at the beginning of the video. So here is where we have a lot of liquidity, but at the same time, above 100K, there's a lot of short liquidity that are trying to short Bitcoin price, and this practically goes all the way back to the all-time highs. This shorting liquidity here. So that's why I'm saying that 89K will most likely be the bottom. It's supported by so many things. So this that I drew here at the beginning, this is a possibility if shit hits the fan in January, but if it doesn't, most likely it will not. Most likely what we will see is a move like I showed first, which is that either we basically bounce up from here or we have that 89K scare and then we go to the upside. If, however, that breaks, then that's going to be quite scary. But at the moment, it seems like the sell pressure is getting lower and lower and lower, while the buy volumes are getting higher and higher and higher. So that's one of the reasons why I'm still bullish in the short term. In the long term, the stock markets eventually will have to have a crash. And as you can see here, this is the S&P 500 index, and when you take a look at that one, you can see that we fell below the trend line here. Now we had the perfect retouch of this trend line, and last Friday we basically ended with a red candle. Luckily, we had a bounce at the end of Friday back to the upside. So this Monday open is gonna be quite critical to see uh, where the markets will be headed with Bitcoin. But I do believe the hype is still there for Trump to basically make everything good in America, good for the stocks and everything like that. But at the same time, keep in mind that this house of cards here, we're looking at the 100 years of stock market history. And when we take a look at the 100 years of stock market history, you can see the S&P 500 index is at this pretty much high here. So it can hover here for a few months, weeks, but at the end, eventually it will have to crash. And most likely that will happen because Trump is not able to implement the things that he wants to as fast as he wants to, and the stock markets will crash. Then there will be a bunch of executive orders, and then we will be bullish once again. But depending if the bird flu really hits the markets, then it could take the prices quite down quite fast. And even now, talking about the liquidity chart here, we did not have a bounce on the liquidity charts here. So the liquidity in the world is drying up. Looking at the global liquidity here, you can see that we're basically at the same level we were in March of 2022 on global liquidity. So the only way for markets to continue to go to the upside is that we have more fiat money, more money printing. But for 2 years, we practically have not really seen money printing almost at all. Sure, we did have money printing from the bottoms to the top here, but comparing the prices of the stock market right now to what they were here in 2022, obviously the prices have continued to go to the upside while we haven't had any significant increase in global liquidity. So this is just showing me that unless we see massive amounts of liquidity injections, money printing, all these things, then the stock market basically has to go to the downside because there's just no more money to go around. So this is gonna be quite bad. So long term, I am now bearish. In the short term, Bitcoin price looks good. So that's my analysis for today for this crypto update. I hope you guys like this update. If you like to have more content like this, make sure to subscribe. And if you want to trade professionally, you know that I use Bybit.com for leverage trading. You can do spot trading, you can do copy trading, you can do bot trading, you can do all kinds of trading with Bybit.com. If you use the referral code denome, you get 10% discount for your first 30 days. You are eligible for $30,000 in welcome rewards, as well as right now there's a 500 USDT position airdrop if you sign under my affiliate link and you click this register to claim button and you do the tasks that are needed for this airdrop campaign here. Anyway, that's it for this update. Thanks for watching and bye bye.